Okay, well, welcome everyone. We are so pleased that you could join us today to learn more about the Paycheck Protection Program and other options available to you in the stimulus. My name is Karen Tylick. I'm the program manager with Homegrown, and today I am joined by my colleague, Vinette Pierre, who is a digital communication specialist with Homegrown. And we are also honored to have Gary Romano with us from Civitas Strategies. This is truly a tremendous opportunity because Gary is really an expert and has done an amazing job in helping other providers access the Paycheck Protection Program in the first round. And I don't know anyone who is better positioned to speak to what's currently going on with the Paycheck Protection Program and the stimulus. So he is here to give you some really valuable information and also take some of your questions. So we welcome your questions today in the Q&A. We welcome you to say hello and introduce yourself to everyone in the chat box. But if you have a question for Gary, the best place to put it is in the Q&A, which should be at the bottom of your screen. I am going to launch a poll question here. So we would love to hear a bit more about your experience thus far with the Paycheck Protection Program. So let us know what your experience is. And while you do that, I'm just going to give a quick overview for anyone who may be new to Zoom. So in case this is your first time, we'll go over just a couple of things to make this go smoothly. The first is that you will be muted throughout this call. That helps us reduce background noise and make sure that everyone can hear our presenters. So you will not need your microphone, but of course you can ask questions in the chat and in the Q&A. The Q&A looks like a bubble at the bottom of your screen. We'll be gathering questions throughout the call and we'll make sure to answer those questions at the end. And this call is being recorded for anyone who could not join us live. We'll make sure that the recording is posted to our website and also goes out via email by Thursday at the latest. So let's take a look at the results of the poll here. What's your experience with the Paycheck Protection Program? Looks like we have a range of experiences, including some folks who did apply and receive a PPP loan in the first round, but about half of you did not. And we have a few folks, and this is their first experience in learning about the PPP at all. So we welcome all of you, no matter what your experience is with PPP, and promise that you are in the right place to get information about it now. So with that, I'm going to hand things off to Gary to tell us all about it.
Thank you, Karen. And it's a pleasure to be talking to everyone about stimulus today. As Karen mentioned, we've been doing work in a variety of different capacities around the nation when it comes to stimulus with home-based providers specifically, right? We've also worked with centers, but, and that continues, actually in the latest work we've been doing over the past week and a half, our team has talked to 78 different providers, most of whom have been home-based providers. So the data you're hearing, the information you're hearing is for you. It's not, an abstract thing where it's just for any small business, but this is about your business. So let's jump into it. Today, we're going to talk about where we are on the federal funding that's coming down. We're going to talk about 6 questions to ask for your eligibility. So this is how I spent my Christmas vacation, was distilling the stimulus down to 6 questions you can ask yourself. We're also going to talk about how to get some help, including a guide that we'll be sharing through Homegrown that has step-by-step instructions. And that was my little early learning experiment, dropping off some coffee for me. That we've distilled down that'll help you figure out what you're eligible for and what you're not eligible for. And so we'll talk about how to get that guide as well as some other supports. Before we get started, there are 3 things I want you to know. One is this can be a bit overwhelming. So we're going to talk about a lot of information. There's more in that guide. We're going to be able to share with you an email where you'll be able to reach us with your questions. But, it's going to be a little overwhelming, just warning you, but you can do this, right? You run a small business. This is small business funding. This is funding you're entitled to, you deserve, and you should be able to get. And we have providers just like you that we've been working with who have been able to secure this funding in the past and in the latest stimulus as well. And there's going to be some help, as I mentioned, that we're going to talk about how to get that help and access it. So no, you are not alone. So talking a little bit about where the stimulus is. The stimulus was signed on December 27th, 2020. This is the latest round of federal funding coming down. And this is specifically small business funding that we're talking about. There were some components directly for early learning, but today we're focusing on the small business funding. And there's some new funding in it. There's also some changes to some of the existing programs. So you're going to hear me talk about some programs that you may have said, Gary, we haven't heard you talk about that one in the past, or we did, but you didn't recommend it. Some of the rules have changed in really important ways. And, no, this is what we know as of today. The guidance is being updated, so there will be more guidance along the way. But, we're trying to give you the best and latest information that we have. 6 questions, I promise you. Don't worry about like making this an eye chart and like leaning in. We're going to go through each one of these questions, but I wanted to show you just in one place, there's 6 easy questions and they map to different types of stimulus that are being offered right now. Remember, it's really important to remember that if you qualify for more than one, you can pursue more than one. So this is not like a lot of the stimulus that we saw last year where it was you could have this or you could have this, but you can have both. What we're talking about here, all of these opportunities, you could theoretically, get at least 5 out of 6 of them at any given moment, and theoretically get 6 out of 6. So know that if you see more than one that you could be eligible for, you can pursue more than one. First question, did you have a PPP? And this goes back to the poll that Karen shared at the top of this conversation, right? For many of you, the answer is no, right? There was 50% of you who answered that poll and said, gosh, I haven't gotten a PPP yet. And that's fine. But what I would say is this is the low-hanging fruit, right? So I'm going to talk about what the PPP is. It is open now. It just opened all banks a week ago. There is a limited amount of funds, and these are cross-sector for small business. So there's competition for this money. So if you are going to do this, this is something you want to do sooner than later. And it's going to be a little easier for you for that first time around. So let's talk about what the PPP is, because I know this is already a point of confusion that could be a little bit overwhelming. So the PPP is a forgivable loan. So I'm not a big fan of debt. So please take a deep breath. Right? We're going to get through the debt part. I promise there's going to be a part where it goes away, right? So it's a forgivable loan and it provides you with 2.5 months of salary for you and any W-2 employees that you have. If you have a 1099 employee, they're technically a contractor. They can actually apply for this themselves. In fact, I was talking with a home-based provider last night. She runs the business. She has a 1099 who works for her. Both of them can apply for the PPP because independent contractors can apply. So it provides 2 months of salary for you and for your W-2 employees. It's a forgivable loan. That means it starts as debt, right? So you're going to owe the government. And the reason why they did this was they wanted a way to help small businesses that had some accountability. So what they said was, well, we're going to give Karen this loan, and assuming she does the right things, then we'll forgive it, which means we make it go away. It eliminates the debt. So the idea is they're really trying to give you a grant, but they want to make sure that you use it in the right way first, right? And the right way is payroll, 60% or more has to be on payroll. The remaining 40% can go to things like rent, utilities, your mortgage interest, PPE now. They just recently changed that, some of your cleaning supplies. There's a lot of ways that you could use this money. And I should say for a lot of you where it's a smaller loan, there really is, and we'll talk about this in a minute, very little paperwork. So you don't have to worry about a ton of record keeping. This is open to corporations, nonprofits, LLCs, sole proprietors, contractors, right? So again, your 1099s in your world, they can apply. You can apply as a sole proprietor. You can apply as a corporation, right? There's versatility here. The way you apply is very similar to those of you who have seen me talk about this in the past or have applied for PPP, you know already. You do this through a bank. So what happens is you're going to the bank, not literally, it's all online, and you're going to fill out a form there that is information the government has asked them to collect. That information is then used by the bank to, make sure that you're open, you're functional, you deserve the money. They then get the money from the government. The government is guaranteeing the loan. So that means it's not going against your personal credit, has nothing to do with your credit history. It doesn't affect your credit history. The government is saying they're vouching for you, right? Government gives the bank the loan then goes to you. 8 to 24 weeks later, you are able to apply for forgiveness. Now, again, this is a bit of difference because, if we were talking last spring when this all started, and there was one home-based provider, I remember very clearly one of my first conversations in helping providers through this, and she said to me, um, you know, how is this going to get forgiven? What's the process? And I was honest with her, and I said, I don't know. We don't have a process yet, but we have to trust that it'll happen. Unsurprisingly, she had some hesitations. Now, subsequently, we've gotten a forgiveness process, right? And now we know what that looks like. And because of that, we now have the ability to say we know what's going to happen with some certainty. And interestingly, that same family care provider was one of the first people online this go around because she had reached out to me even before the stimulus was signed and said, Gary, remember that conversation we have? I've been following it. I now have seen your videos on forgiveness. I get how it goes away. So I want to be in. Forgiveness was already pretty easy as of the start of December. It's now gotten even easier. So we just got a form out um, based on the new law that was signed. And if your loan is under 150,000, which is going to be the vast majority of our home-based providers, um, you only will have to fill out a very short form. By law, it is one page with no attachments. You have to answer two questions, basically initial them. And they essentially say, I didn't go and blow the money in Vegas or buy a yacht with it or something along those lines, but I used it for my business, right? Which I know that's what your intentions are. So you'll be in alignment with this. But once you do that, that form is accepted by your bank, then goes from the bank to the SBA and the loan goes away. And so, I think with this new, easier form, a lot of you who might be waiting for forgiveness, it's going to be probably happening soon. We have to wait for the banks to convert that form to their online systems. But I think we're going to see that in February, likely. So again, if you haven't had a PPP before, this is low-hanging fruit. The form is simpler than ever. The guide, as I mentioned, that we have has step-by-step on how to go through the form and fill it out. This is a great way to start because basically it's saying you're in business, you have a need, we can give you the money. So before we get into the other questions, we have to get some numbers, okay? So to answer the next questions, right, you're gonna need your gross receipts for 2020 and 2019. And that's just a fancy way of saying how much income did you have, right? So everything, we're not going to count your PPP, your EIDL, we're just going to count your revenue, but it does include parent fees. It includes, grants that may have come down from the state or your locality. Those are all included. If you want to find this information, your tax return, for those of you who are sole proprietor, your Schedule C can be helpful here. Accounting reports can be helpful, bank statements. These are all tools that you have at your disposal that could be helpful in determining, what those numbers are. Certainly if you're using an accounting system like QuickBooks or FreshBooks, this could be relatively easy, right? Because you can get that output. So we're going to use these numbers in two ways. One is we're going to do change by year, right? So how much did your revenue change from 2019 to 2020 for the year? This is only open if you were open all of 2020. If you were open for emergency care, it counts, right? You can still do it. But if you had to shut down, like I know many of you did, for a period of time, you can only do it by quarter. And that's okay. We'll get you through that one as well. This is going to use those gross receipts, right? So again, sole proprietors, you're going to want to look Schedule C, line 1. Make sure you line up with that for your 2019 numbers and whatever you're going to put in for 2020. You don't want to start improvising on these numbers, right? They should align with what you're reporting to the government and your taxes. For corporations, right? LLCs, C Corps, S Corps, you're going to look at that total income line of your corporate taxes. And that's going to give you the information that you need for this data. So very simply, and this is in the book that I mentioned, you literally could write it in there. You're going to take your gross receipts. Column A is 2019, column B, 2020, column C, all you divide is divide column B by column A. And that gives you essentially a percentage, right? In this case, it's saying your 2020 revenue was 70% of what you earned, right? So it was less than what you earned in 2019. We also want to do this by quarter. And you're going to see why in a few minutes. So even if you can do the annual, if you can't do the annual, then you're going to have to do quarter anyway. Even if you could do the annual, go through quarter for me as well. Again, you're using those gross receipts, and you're going to remember that, the quarter is the calendar quarter. So January, February, March, April, May, June, July, September, July, August, September. See, it's not so easy. So, do note if you were closed for an entire quarter, we just want to leave that closed, right? But the entire quarter. So if you were closed just August, you should still have data for quarter 3, right? If you are closed July, August, and September, then you'll have nothing in there. And let's take a look at what this looks like. Again, this is in your book, but you'll see in column A, 12,000, 12,000, 12,000, 14,000. This provider was doing pretty good, right? Pretty level all year. But then we see, and this is, by the way, this is based on real provider data, not that I'm like, sharing, revealing any specific numbers, but this trend is, right? So we saw a lot of providers that actually started 2020 pretty strong. And then it went down because they got closed for a while by government order. Then when they reopened, the revenue wasn't as good, but there were some grants out there. There were some other things that could help them. But then when they got to quarter 4 of 2020, for the most part, it gets pretty dim because, a lot of stimulus from the previous tranches was used. There wasn't as much funding. A lot of parents weren't putting their kids in care. So we can see that's what happened to this provider. And again, you can see the percentages over here in column A. They first started out having more money than last year. Then they're closed. And it's less money than last year. And then it's less than half of what they got last year. So these numbers are going to be really important. And I know it's going to be a bit frustrating because you're going to say to me, Gary, why is it about revenue, right, and not profit? Because my revenue may have stayed the same because my state was paying subsidies, but my costs have gone up, right? Unfortunately, these are the rules that we've been given. They are imperfect, just to name it. But do know, unfortunately, these are the rules. So be aware of them. Whoops. See, you're getting ahead. You got a preview there. So question 2, did you have a quarter to quarter decrease in revenue of 25% or greater? So that means, is there any quarter from 2019 to 2020 where the 2020 revenue was 25% less or more than that, right? So that column should be 0.75 or lower, right? So just as a reference, I won't do this to you every time, this column, right? So we see it right here. This is less than 0.75, right? That's our target. And if you've already had a PPP, so this is for those of you who want a second draw, as they're calling it. Second bite of the apple is the other expression they're using, right? You should be able to apply for second draw. So the second draw of the PPP, what the government said is you need to be able to show an impact to your revenue where it's decreased quarter to quarter by 75% or more, 1 quarter. So just like in our example, you know, this provider started out strong, right? Is this quarter below the 25%? No, it's above 100%. But because of this quarter, they're eligible. So keep an eye on that. It's an important thing to remember. Again, this is 2.5 times your payroll, same as a regular PPP. This revenue test that we're talking about, you're going to need to show it at application if you're looking at 150,000 or more for your loan. I know for the greatest numbers of you, those loans are going to be less than 150. So your bank may or may not ask you because technically they don't have to ask you to pass the revenue test until you apply for forgiveness later for a second draw. I would strongly recommend do the revenue test. We've had a lot of providers who have said, I know I'm going to pass it. And I would say, for those who say they know they're going to pass, about 75% of the time they do, but the other 25%, they're not right. So you want to make sure you have these numbers lined up before you apply. And by the way, one of the other resources that we'll be sharing is a simple spreadsheet that'll do this for you, by the way, and just give you a check or an X on your eligibility. So this is important. Do it first. Even if it just takes even if it's just on the back of an envelope, have something you can point to that says, yes, I did qualify. Again, you're going to apply through a bank, right? The forgiveness process is the same as with a typical PPP, which by the way, to apply for the second draw, if you notice, I haven't said anything about is your first PPP forgiven. That's a big myth out there. And I'm not sure how it's getting out there, but a lot of people are saying, well, until your first loan is entirely wrapped up, you can't get a second one. It's actually not true. What the government's saying is you've used your first loan, right? Which you should have done within 24 weeks of disbursement. So if you're looking at a second loan, it's your first loan is gone, you're eligible if you meet this criteria. Next question. Did you have a quarter to quarter loss of revenue of 50% or greater, or have an ordered closure? So what that means is, did the government at some point say, sorry, Vanette, you're going to have to close down your business for a while because we have concerns about COVID? And I know for a lot of early learning providers, this was the case, especially in the spring. Oh, sorry about that. For some reason, my headset popped off. So where you did have a closure, keep in mind, we're going to be talking here for a few minutes about W-2 employees. So I know many of you don't have W-2 employees, but some of you do. So even if it's just one W-2 employee, even if that W-2 employee is yourself, this counts for you potentially. So if your column C is 0.5 or lower, right? So you made 50% or less than what you did, right? So we went back to our example. That was quarter four, right? It was 0.43. So it counts here. In that case, you are likely eligible for the Employee Retention Tax Credit 2020. And I say 2020 because the rules are going to change in 2021. We'll get there. So bear with me. The ERTC is a refundable tax credit. So I said there were parts that were confusing. This is one of them. Take a deep breath, right? We're going to get through this one too. Here's how a refundable tax credit works. It is a fancy way of saying a tax credit where you can get cash back. The tax credit, I still don't understand why, but the federal government has it come into your employer Social Security account. So if you have a W-2 employee, whether you're a for-profit or a nonprofit, you have to pay Social Security taxes. So you have one of these. So I've had nonprofits say, but I don't pay taxes. Different kind of taxes, right? These are your employee taxes. So the credit comes into that Social Security account. Now you can leave it there and use it as a credit against your future payments to Social Security on behalf of your employees, or and we'll talk about this throughout these refundable tax credits, you could use what's called Form 7200. It's a one-page form, step-by-step instructions in the guide, that says to the government, I have $3,000 in credits. I want to cash them out. Please do so. And about 2 to 3 weeks later, you get a check from the Treasury, the US Treasury, for that amount. So that's what they mean by it's refundable. So let go of tax credit and think about it as weird grant mechanism, right? Think of it that way. Here's how it actually pays out. And this is where, we're seeing a lot of home-based providers and centers that have W-2 employees get a lot of benefit out of this. What it does is this. It says the first in an eligible quarter, right? So either you had that closure or you dipped below 50%, you can get $5,000 in credits for the first 10,000. So essentially, the first 10,000 earned in that quarter, you get half of it for a limit of 5,000 a year. So if Vanette worked $20,000 worth of time in quarter 4, as we said, our hypothetical provider was eligible, the owner would get $5,000, right? Because she worked all that time, but it's only the first 10,000 we're looking at. If Vanette worked $8,000 worth of time, the company owner would get $4,000 in credits. That's per person. So again, you can see if you have a couple of employees, or if you're one, where it could add up, right? So do you know there's an additive benefit to this, and the numbers can be really big really quickly, right? So, this is a really great opportunity for nonprofits out there, and I know many of you are not, but if you are, additionally in 2020, your staff need to be idle, which means they weren't working at the time. If you're a for-profit, if Vanette is working and eligible, you can draw this credit off her time. So one other thing I want to make sure we talk about, because you're probably saying, Gary, why have you never mentioned this before? And the reason is because last year, when the pandemic was new and we were all naive and just learning about it, it was your choice was either this or a PPP. And early on, financially, the PPP was a better deal. So we talked a lot about the PPP. There were many audiences I mentioned this to, but usually what I said was, but the PPP is better. As I mentioned, the government changed a lot of rules this go around. And one of the rules they changed was that you can now get a PPP and an employee retention tax credit in the same year. The rule, though, is, and this is an important caveat, you can't get payment at the same time for the same person. So if Karen is on PPP money in May, she can't also get employee retention tax credit money. Say by June, she's off the PPP, she could qualify for this. So if you have a W-2 employee, even if you just have one, even if it's just you, take a very close look at this and the next one. So did you have a quarter-to-quarter drop of 20% or more in quarter 4? So again, we're talking about an employee retention tax credit. Here's the weird thing. As I mentioned, the rules changed for 2020. They get even more different in 2021. First of all, they pull the threshold down. So you remember, we were talking about 50% or more. Now they're saying 20% or more. Well, that's a much easier number for a lot of you to hit, right? And you can base it on your fourth quarter 2020. So those of you, like, I was literally talking to a provider earlier today who hit below that threshold in quarter 4. And I said, call your payroll provider, sign up today. This is how you get these credits, by the way, is you start with your payroll provider, let them know you're eligible. They do the paperwork, right? So number one, the threshold went down. So you have a greater chance that you're going to qualify if you have W-2 employees, including you. Now they also raise the amount of money you get. So instead of getting half of that first 10,000, you get 70% of it. So if Karen works $30,000 worth of time, you get $7,000 in that quarter. If she works, let's say $5,000 worth of time, you still get $3,500. So that's a pretty good deal. And again, the refundable tax credit can come off your taxes, if you're a sole proprietor, or you can use that $7,200 if you're a corporation to withdraw that credit in the form of cash. What I would say is another big difference is, when we were talking about the Employee Retention Tax Credit 2020, the limit is $5,000 a year. 2021, it's only good for quarter one and quarter two, but you can have up to $7,000 per quarter. So if you have a W-2 employee who qualifies both quarters, that's $14,000. It's nothing to sneeze at. So this is a good, the tax credits are a bit esoteric. We have one more coming up, but there's some real money in it, which is interesting. Is your enterprise in a low-income community? This is the federal government's terms, not mine. Don't love this term, but this is the term they use. If your answer is yes, and we're going to have a revenue check here, right? There's an opportunity here for the EIDL, and we'll talk about that because there's a lot of confusion around this one. The program we're talking about here is the targeted EIDL, economic impact. No, I'm totally forgetting the acronym. I'm so used to calling it EIDL. So this is the disaster loan, the one that many of you, economic impact disaster loan, that many of you heard about, that had the $1,000 to $10,000 advance, and then there was a loan component to it. Sound familiar? I know a number of you probably have them. So the targeted EIDL is a bit different. So a lot of people are getting confused because the EIDL is still around. There's no advance anymore. They spent all the money, but you can get the debt if you want it. If you want a loan program, there is one. But here we're talking about the targeted EIDL, which is targeted to these low-income communities. And that's defined as a census tract with a poverty rate of 20% or more. There's a link in the guide that can help you figure this out based on your home address. So, not a problem. We'll get you there. But if you meet that qualification and you can show an 8-week decline of 30% or more from 2019 to 2020, we don't know all the caveats yet. I'll explain that in a minute. There is a chance to get some of that cash advance. So originally, we didn't know how this program was going to work. Like if we look back at December 27th when everything was signed, we didn't quite know how. And then the government came out with partial guidance last week. And what they said was, first, we're going to send a letter to every single person who got a partial EIDL. So they got less than $10,000 of that advance in one of these communities. They're going to need to show this 8-week decline. We don't know the rules yet because nobody's gotten this email. So we don't know exactly how you're going to show it, but we do know it's going to be a requirement. Second, an email is going to go out to everyone who applied for the EIDL advance in these communities but couldn't get one because they ran out of money. So if you applied November or October for the advance and they didn't have it, and you're in one of these communities, they'll reach out to you. And I should say, I'm saying letter, it's actually an email with an @sba.gov suffix. So if you see @sba.gov, that's an email you're going to want to open and not just throw away. Again, you're going to want to look closely at how you're going to do this revenue test because we don't know yet. But for those of you who applied or got a partial EIDL in the past, and you're in one of these communities, keep an eye out for it. For everyone else, hang tight. We don't know what happens after that. We don't know if it's going to be still targeted to these low-income communities, if it's going to go broader. We just don't know. This is literally all the guidance we've been given so far. We're in the home stretch. One more question. Did your team need time off for COVID or remote school? So if yes, then you can apply for the Families First Coronavirus Act leave. So this was mandatory leave for you and your employees in 2020. It's been extended to the end of March 2021 on a voluntary basis. So you don't have to do it anymore, but if you do, you can get this credit, this tax credit, refundable tax credit. We're talking about them again. So What do you get for this? You get up to 10 full days of pay for you or your employees, and these are W-2 employees, right? But this includes you as a sole proprietor this time. So if you're not a W-2 employee, it's just you, this can still work for you. For COVID illness, caring for a family member, or quarantine, right? I know this is something a lot of you are going through right now. You could use those 2 weeks for your sick leave, and an additional 10 weeks at 2/3 pay for caring for your child at home because of a school closure. So keep in mind the SBA did clarify this. Originally, when this first came out in April, this was when all the schools were closing, right? And so it can still be used for that. Like, for example, I was talking with a provider who had one of their teachers who's a mom, her daycare closed. She has an infant. She needs to care for the infant. She can't get infant care. And so they could pay her through this, or at least recoup what they were paying her because they were committed to pay her. Alternatively, we had another provider where mom on the at-home learning schedule had to be home with her son on Fridays. She can also use this, right? The provider was paying for that time and using that time, and so you could use it part-time. It doesn't have to be full-time. It can be just part of a day, a full day, right? And this is a refundable tax credit. So those of you who are sole proprietors, this is going to come off your taxes at the end of the year, or if you pay quarterly estimated taxes, you can take it off then. Or if you're a corporation, whether it's a nonprofit, S Corp, LLC, you can use that form 7200 again. Same form withdraws the credits. And again, I would say this is one to really think about, especially with tax season coming up. you know, if you're a sole proprietor and you had to have some time off, especially I know a lot of you had time off that you had to take in November because either you were sick, a family member was sick, or you had to quarantine, write this up, record it, right? Bring it to your tax preparer, let them know that you qualify. And this comes off as a credit, which means if you owe money, it comes off the money you owe. If you get a refund, it makes it even bigger. So remember, this is a moving target. Things are changing, right? So you need to pay attention. If you look at this timeline, since January 1, we've already been doing a whole lot, right? The PPP opened. We got guidance on the employee retention tax credit, both in 2020 and 2021. We got the new PPP forgiveness form. We have this targeted idle thing going. We're not quite sure when that's going to hit the street, but we at least have some guidance. So you can see there's a lot of information coming out. You want to pay attention. Pay attention to Homegrown. Follow them on Facebook, on Twitter. Join their email list. Look at the newsletter. Other sources, your CCR&R, definitely a great source. Your state QRIS system. These are all people who'll be sharing this information. Pay attention to them. A few months ago, I was talking to a provider who was saying she was kind of tired of the CCR&R emails. She just always deletes them. And then she was wondering why she had missed out on some of these opportunities. And so we did have a conversation, a very frank one about, this is a time, unfortunately, you have to read every email. Even though I know you're very busy and you're very tired at the end of the day, this is a time to do it. But you also know there's some help, right? And, first and foremost, if you have a question, we've been engaged by Homegrown to answer that question. Any provider, any home-based provider in the US can email us at ppp@civstrat.com, put it in English or Spanish, whatever you're more comfortable with, and we will answer it, right? On the PPP, on stimulus, don't hesitate to ask us. No question is stupid. No question is bad, right? This is an important thing. You're making decisions about your business, about things that can influence your life and your family. We take that very seriously, so don't hesitate to reach out to us. We also have a resource page, which is homegrownchildcare.org/PPP-resources. That's where you're going to find that step-by-step guide. Know that's there, right? We also have a spreadsheet to make some of these calculations a little easier. And there's a revised forgiveness handbook that'll be coming soon. As soon as we get a little bit more guidance, we're going to be also updating the forgiveness piece so you know up to the minute how to pursue forgiveness. Couple of pro tips. If you're going to go for the PPP, I would apply quickly. Everyone's always asking me, um, you know, is the PPP, when's it going to run out? This current number, I don't know. You know, the federal government changed the rules enough where there are some reasons why it should go slower, but then other reasons why it might go just as fast, right? So it's hard to tell. When in doubt, apply for the PPP or PPP2. If you're eligible, get them done. Do those first, then worry about some of the other opportunities we talked about. Do apply for all you can, though. You know, um, I was on a webinar a couple of weeks ago, and I likened it to being a little squirrel gathering your nuts, right? Like, gather your nuts while you can. We don't know. We're hoping that we'll be through all of this by the summer, but we don't know. We don't know what tomorrow's going to bring. So if you're eligible for it, get those nuts, store them in your cheeks, bring them back to the nest, right? And again, ask for help. We're here to help you, right? This is what we're being paid to do. So please don't hesitate. There's no question that is too small, that is too insignificant. We'd rather you ask us a question, we can answer it quickly, than you don't apply for these things quickly or at all because you're unsure. So remember, you can do this. There are other providers like you who are doing it as well. You have that help, you have some knowledge, you can get this done. So with that, I'd like to talk about some of the questions that you have.
Great. So thank you so much, Gary. We did have a lot of questions come in, so we'll do our best to answer as many of them as possible. And we spoke about a couple of different ways of getting funding, starting with the PPP. So why don't we start with some of the questions related to the PPP? So some of the basics here. So Gary, can you address the payroll question? So do you need to have payroll in order to apply for the PPP?
So yes and no, right? So I will say you do need payroll, right? But it also depends on, I want you to take a deep breath and talk about the different ways that you can show payroll, right? So for example, you have W-2 employees, you probably have a payroll system, right? You're paying them, that's payroll. If you're a sole proprietor, whether you have W-2 employees or not, it's your Schedule C, line 31. So that's your net profit. That's what's going to be your payroll, right? Look there. If you're an independent contractor, that 1099, and you're not doing a Schedule C, use your 1099. So you do have payroll. The question is, where is it, right? And how do you find it?
Thanks, Gary. I heard you say we don't know when the funding is going to run out. Is there a published deadline for applying for the PPP?
So the published deadline is the last day of March 2021. I strongly suspect the money won't last that long. If you haven't done it, I would be thinking about the next 7 days. Activate, the sooner the better. Keep in mind, folks, you can't accept more than one loan, right? So legally, Karen can't take two loans, but the SBA system, as soon as Vanette and I are vying for, like, she put an application into each of our banks. Vanette puts her information in the SBA database first. She claims Karen's loan. I can't enter it anymore. So you don't really have to worry about getting two of them. But you do have to worry about the fact that the banks work at different speeds. I have not been able to figure out a pattern to it. So if you can, apply to more than one.
Thanks, Gary. And you said you can't receive more than one loan at a time, correct? But we did discuss.
Yes, you can't say I'm going to take two of those, please, like right now, right? So you're absolutely right. You can get a second loan. That's the whole point of the second bite at the apple.
Great, thank you. What if someone would like to apply for the PPP but has not yet completed Schedule C for 2020?
So if you're applying for the PPP, you're going to be using your 2019 data, which sounds weird, but they're using it for, your pre-COVID numbers. So if you have that 2019 Schedule C, you're good to go.
Okay, great. And we have someone who's asking about if you've applied for PPP previously, must you reapply if you didn't receive it because the funds ran out?
Um, I believe you do. Actually, it's the first time that question has come up. It's a good question. I would, as a matter of course, because I believe a lot of the banks purged those out. Further, I would think about the fact that there's a lot of banks that were in the previous round that aren't playing this round. So I would put in a whole new application.
Okay, great. Thank you. Um, all right. And if a provider received grant money to help them remain open through COVID, will that affect their ability to receive PPP?
So yes, it will. So it does count as gross revenue, right? Your PPP doesn't, but that grant money does, even though it may have come from the federal government. So for some of you, as I mentioned the example earlier, if you ended up with a state where you're paying out your pre-COVID subsidy and then you got some grants, your income may have actually gone up. Now, your costs have gone up even more. So I know you're feeling the pain of this. I'm not trying to pretend like, hey, what's wrong? You're making more money. It's costing you more. But unfortunately, we have to look at revenue.
Okay, great. And where exactly do you go to apply for PPP?
So you go to a bank, right? Online. So this could be if you have your own bank, if you're using a traditional bank, very often they're requiring you to have an existing business relationship with them. There are also ones like Lendio, Biz to Credit, and Fundera, I'm sorry, not Fundera, Funding Circle, which will take anyone, even if you haven't had a prior existing relationship with them. Those banks are probably a good bet because they're trying to move those applications through quickly.
Okay, great. Um, can you speak to unemployment and how you factor in unemployment in these calculations?
So you don't, right? So unemployment is separate. So we're talking about business income here, not your personal income. So I absolutely get that there may have been a period that you were unemployed, but for purposes of the stimulus that we're talking about here, it's strictly about your business income. So, unemployment would be considered personal income. It would not count for the calculations.
Okay. And Gary, could you speak to allowable expenses under the PPP? So, what can we spend funds on?
So it's a lot broader than it was before, right? So first of all, know that at least 60% at least has to be done in payroll. If you're a sole proprietor and it's just you, it's actually remarkably easy to do this all as straight payroll. As I mentioned, the forgiveness is a lot easier. If you want to spend it on other things, you can spend up to 40% on utilities, right, including transportation, mortgage interest, not principal, but you can put on your full rent, right? PPE and other cleaning supplies count, even cloud computing systems. So if you have a CCMS, like Wonder School, that's covered too, actually.
Okay, great. Thanks. We have tons of questions coming in. So, thanks everyone who is submitting your questions. We have a number of scenarios of folks who were talking about the interplay between idle and PPP. Um, so, I'll give you one of these scenarios, Gary, and maybe it will help us address some of the others. So, we have a provider who's saying, I received a $2,000 idle grant and then was approved for a $1,400 PPP. I now owe $1,400 on the idle. How would a second draw of PPP work with this? I do have 40% revenue decrease from 2019 to 2020.
So how would it work? A variety of different ways. So this is where it's going to sound like I'm like talking about all different things. There's two potential scenarios here, Diana. One is that if you're if the idle you're talking about was an advance, right? And a lot of you'll remember your idle advance came off the amount that you can get forgiven by your PPP. So a lot of you, and I know we had a couple of questions that Karen was kind of to share that you had ahead of this webinar where you said, what happens if, I had this advance, it came off my forgiveness, so now I owe money. That's actually going to go away. We don't know the mechanism yet, but that's actually in the stimulus that those of you who had an advance that came off your PPP, that money is going to have to come back to you by law. So if it was actual debt, right, that you had in your PPP, you should be able, when you go for a second draw, to roll that debt over into your next PPP, which actually brings it at a lower rate. So if you haven't done that already, would recommend it. The banks are doing that inconsistently, so you may need to ask about it specifically, but know that is an option.
Thanks, Gary. I think that gets to Monique's question, where she said she's heard that the idle can move over to the PPP and reduce the interest rate to 1%. Is that what you're speaking to
That's
here?
exactly it. You got ahead of me, Monique.
Great. Thanks very much. Um, okay. Give me just a moment here. Could you speak again to the advanced grant with the idle? So will only people who have applied for idle receive the advanced grant? And do we know about a deadline?
We don't. And for both of those, I'm the little emoji shrugging my shoulders. So we literally know everything I told you is all we know. We know that they're going to start by sending an email to the people who applied for one and didn't get the full amount in those communities, or who applied and got nothing. What happens after that? There was literally silence on the guidance from SBA. So I don't know, will it continue to go to people who never applied from those communities? Will it go to everybody? We just don't know. And we don't know when those emails are going to come out. So if you're sitting there saying, gosh, I'm one of those people who should be able to get money out of the idle advance because I did apply and I got nothing, or I got a partial idle, keep an eye out for that at sba.gov email. We don't know when it's coming, but hopefully soon.
Okay. And we have some questions about when you are eligible to apply for the second PPP. So, can you apply for the second PPP if you have not yet submitted your forgiveness application? Um, yeah, I think that's the same.
Absolutely. So what the law says is that you don't have to have forgiveness, but you do have to have spent it. By now, legally, you should have spent it, right? And I know some of you squirreled it away, not to overuse squirrels, but technically that's considered spent money, right? So you do qualify for that second PPP.
Okay. And with the second PPP, when you compare your gross income, does it have to be quarter to quarter, or could you also use the total gross income for each year?
You can use the total gross income for each year. You are going to want to have, some really specific evidence, for 2020, since most of you have not done your taxes yet, but you can use the overall year.
Okay. All right. So I have another scenario for you here. So from Desiree, I was a 1099 employee for two childcare centers I managed from March of 2019 to March of 2020. COVID happened. Unemployment was collected, but I was also working towards opening my home childcare, which opened in September of 2020, officially licensed in October. Am I able to apply?
Unfortunately, not for the PPP. So what I would say is, look at, if you weren't open by February 15th, unfortunately, you can't apply. I would look at things like Families First leave, if you could use that at all, or some of the other opportunities. But yeah, I mean, unfortunately, it does limit it for some of the newer businesses.
Thanks, Gary. We have someone who has applied several times for the PPP and was denied, and was told that it was because she pays her three employees via 1099. So it was considered not paying via W 2. Does she have a chance now using the same tax return?
No, if they were 1099 contractors, technically, and I know a lot of us in the field will say a 1099 employee, under the eyes of the law, they're not an employee. They're a contractor. And so what the federal government has said is contractors can apply for these fundings themselves, right? So if you have a 1099 working for you or somebody working for you under a 1099, they can apply for the PPP themselves. Unfortunately, you cannot apply for them and get that money.
Okay. Thanks, Gary. And I believe you addressed this, but where do we go to find the forgiveness form for the first round of the PPP?
So the forgiveness form will be sent to you by your bank. Many of you have not received it because the banks were the ones who were lobbying for this simpler form. They want these things done with. And so they've been holding out for this simple form that I described that just got signed in December. So in February, hopefully you'll start seeing more of these hit the bank portals, and they'll want to get them off the books pretty quickly.
Okay, great. And where can you go to apply for the Families First Coronavirus Act leave?
So you're going to do it two ways. If you use a payroll company, contact your payroll company. That's the easiest way to do it, right? If you're a sole proprietor, you're going to want to record that time, and you're going to want to either take it off your estimated quarterly taxes if you do it, keep track of it because you're going to want to have it for your year-end taxes, or you're going to put it on your year-end taxes. We don't know exactly where it's going to be, for example, on the 1040, but that is the mechanism that you're supposed to use.
Okay. Okay. And we spoke to using Schedule C for 2020. This question is, can you repeat, can I use the Schedule C for 2019 to apply for the second PPP?
Yes, in fact, you pretty much have to,
Okay.
right? Like unless you're a new business, yeah, that's going to be where you're going to get your data from.
Okay, great. And can you speak to tax implications? So are PPP funds counted as revenue for taxes?
So PPP funds are not counted as revenue, and you can still have the deduction. So here's what I mean, because some of you, if I know this may sound a little confusing, but previously the government said, Congress said, PPP cannot be taxed. Forgiveness with PPP at the federal level, your states might do differently. We're looking at it in Massachusetts, could tax the forgiveness part as revenue, right? You can at the federal level. So the income can't be taxed. They never address the expenses part of it. So for a while, Treasury was saying, well, Karen, we can't tax you for your PPP, but you don't get to get the deduction for the money you spent on your employees. That's changed with the new law. So it's entirely free. So you get the deduction and you don't have to pay. So essentially it's double counting the deduction.
Okay, thanks, Gary. And can you clarify? We've already spoken about where you go to apply for the PPP, which is directly to the banks. What about these other programs?
So the other programs, the Employee Retention Tax Credit, Families First, again, do it through your payroll company if you have one. That's the place to go, whether it's historical or current. They will let the government know about your credits, and then if you're a corporation, you'll use that Form 7200. Otherwise, if you're a sole proprietor, keep your records because you can't get the employee credit because you're not an employee, unfortunately, but you can get Families First. Keep records of those days and how much you were paying, and then that'll come off your taxes. For the idle, targeted idle, as I mentioned, unfortunately, the guidance we have right now is don't call us, we'll call you. So we're waiting for those emails.
Okay, thanks, Gary. So we are approaching the end of our time together. I want to thank everyone for joining us today and for all of your questions. Our apologies if we weren't able to answer your specific question, but the good news is that we do have these additional resources for you. So I'm putting the email address in the chat again. Feel free to reach out to Gary and his team via email, especially if you have a particular question they might be able to better serve you via email. And again, please visit Homegrown's website. Our PPP resources page has the guide that Gary has been referring to. So the Stimulus Navigator and the worksheet to help you with your calculations are both available there. We will also be running this webinar tomorrow evening in Spanish. So if you would prefer to join us in Spanish, or if you have a colleague who would, we welcome you to join us then as well. You can find registration for that on our website. This has been recorded. It will be posted posted to our website. We will also be emailing it out to everyone on Thursday, so keep your eyes open for that. I just want to thank Gary again for all of your guidance. This is incredibly complex, and we are all better for having you to help us navigate this. And then just one last statement, potentially unrelated to PPP, which is that Homegrown is always interested in collecting provider stories. And so we would encourage you to share your story with us. So I'm going to invite Vinette to put the form in the chat. I see that she did. Thank you, Vinette. If you're interested, we encourage you to go to that link and share some of your story with Homegrown, so that we can continue to elevate provider voices and ensure that your needs are heard and met. So thank you everyone for joining us today, and we hope to be in touch for future events. Thank you.
Thank you.